I do think that most VCs would rather invest in something that has a real quality, value, healthcare impact, not just financial returns. But, forced to the wall, most of them are set up by charter to choose returns. We're lucky at the Heart Association, our venture funds are really meant to balance that mission and impact, but most of them aren't. They're about returns. You can't go to your annual meeting and say, well, my returns weren't good, but I had an impact, and expect to raise a second fund.
Some investments chase returns, others shift reality. Welcome to Blindspot Capital, the show where we trace the capital flows, structural decisions, and invisible forces shaping the future of health. We go deep on what's overlooked, underfunded, or misunderstood, especially where women's health, longevity, and AI intersect. Because this isn't just about the next big trend, it's about who gets seen and who gets funded. Welcome to Blindspot Capital, where we decode what gets funded, what gets forgotten, and why. I'm your host, Maryann. Now, before we dive in, do me a big favor. If you've been enjoying these conversations, go ahead and hit that subscribe button. It just helps more founders, funders, and future builders find us. And it keeps the blind spots in plain view. So now today's guest is someone I chased down the moment I read her words. There was a blog post titled Tough Love for Women's Health Entrepreneurs. Now, halfway through, I don't think I got halfway. I stopped reading and I thought, who is this woman? And how do I speak to her? Now, if you haven't read it, you need to go check it out. Because in that piece, Lisa delivers 10 unflinching truths for founders, cutting through the noise with real insights like women are not a market. Get realistic about the total accessible market and don't use red herring statistics to justify your business case. Now, here's the thing. Coming from a background in finance and investing, I've often been told by well-meaning advocates, you're too transactional when you talk about women's health. They want the impact story, the emotion, the mission. And look, I care deeply, but I think, let's be honest, emotion doesn't get you funded. A credible plan does. A business that works does. And Lisa Suennen said it directly in that piece. So as I said, I hunted her down on LinkedIn and I asked her if she would have a conversation with me for my audience. And she graciously said yes. So here we are having this conversation today. Now, Lisa is someone who has seen this industry from every angle. She's been a founder, an operator, a VC, and a healthcare investor for over 30 years. Today, she's putting serious capital to work behind brain and heart health, especially for women. She is also the publisher of Venture Valkyrie blog, which is not your typical venture blog. It's razor sharp and it's always fearless. And she's also on the faculty at the UC Berkeley Haas School of Business, where she teaches courses on healthcare, venture capital, and innovation. She is also the co-founder of C-Sweetener, a nonprofit that paired women in healthcare with experienced executive mentors. I don't know how she does it all, and maybe we get to talk about that. But if you're ready for a conversation that's as enlightening as it is entertaining, then stay tuned. Lisa, welcome to the show.
Thank you so much. It's great to be here. I'm glad you hunted me down.
So let's get into the conversation. Lisa, as I said, when I first read that piece, Tough Love for Women's Health Entrepreneurs, for me, it felt like a lifeline, because in that piece, you laid out why many women's health entrepreneurs struggle to raise venture capital and what to do about it. You critique the common narrative that doing good for women is enough to secure funding. You reminded readers that venture capitalists are not in the business of moral victories. They're in the business of returns. And you offered 10 pieces of tough love that covered everything from market sizing to reimbursement pitfalls, FDA realities, and the danger of D2C models. I think, in my view, it is a must read for any founder that's trying to make serious progress in women's health innovation. What compelled you to write that piece, and why then?
Yeah, thank you for asking. I've been writing for more than 15 years on that blog, and I have covered a lot of women's health topics, and I've invested around this area and recently started a fund called the Go Red for Women Venture Fund at the American Heart Association and our venture platform. And so I've been seeing a lot of women's health stuff, and it's one of those fields that's however many millennia overnight success. Suddenly everybody's talking about it and people are trying to invest there. But the thing that I keep getting frustrated by, really two things in this category. One is that all too often women's health is talked about as only the things that are under bikinis and
Mm-hmm.
not whole body, all of the things that affect women. And the other thing is that people expect venture capitalists who are in a particular business to suddenly change the rules and not care about the returns they're supposed to deliver to their investors in order to support this field. And that's not something that can happen. And I hear too often from entrepreneurs, that exceptions should be made in this category. And that may be true. And there definitely are impact investors where exceptions can be made about returns.
Mm-hmm.
But if you want a good, sustainable business that's going to grow and benefit everybody for the long term, it needs to make money and it needs to be sustainable from its own cash flows. And ultimately, that's just a good business,
Mm-hmm.
the definition of a good business. And that's really what I think most venture people are looking for. Even the ones that care about impact want it to be sustainable. All the things I kept thinking in my head or saying in parts, I decided to pull it together.
And I think on the impact side of the story, I think what I see in my experience, which is not as deep as yours, and please challenge my thinking, because I think that a lot of founders kind of lead their pitches with the problem, especially because a lot of founders that at least I meet, they come to the problem from a lived experience point of view as a way to sort of prove that this is a legitimate problem worth solving. But I think the danger there is sort of veering down the this is the right thing to do kind of path. And that's not what closes around. So I guess, why do you think women's health startups sometimes sort of fall into that trap of pitching impact and not business?
Well, I think you kind of raise two different issues. One is founders who come at it from, I had this problem, so I built a company to solve it, or my grandma had this problem, or my mother had this problem. I
Mm,
think that's very common in healthcare across the board, actually. On the one hand, it's great because it speaks to the passion that the founder might have about the topic, and passion's important. But one person's problem doesn't make a business. You have to be sure that when you look at a problem, you're looking at it from an industry standpoint, from a market standpoint, and
mm,
being realistic about what the problem is and whether your experience of it is representative of a large enough market. I like to hear what the problem is, but I like to know it's been validated by a lot of people, you know? With respect to the impact issue, I think people are so frustrated, entrepreneurs in this field, with being overlooked for funding and over ignored as the problems are not important or whatever it may be, even when they are, that they're looking for a way to tell the story differently than as a way of explaining away the problem with other VCs, with getting VC attention.
yes.
It's not the answer, it's the problem. It's only the answer for a small subset of impact investors. I do think that most VCs would rather invest in something that has impact, real quality, value, healthcare impact, not just financial returns. But, forced to the wall, if they had to choose, most of them are set up by charter to choose returns. That's what they're
Mm,
designed to do. We're lucky at the Heart Association, our venture funds are really meant to balance that mission and impact, and some others are, but most of them aren't. They're about returns.
yes.
You can't go to your annual meeting and say, well, my returns weren't good, but I had an impact, and expect to raise a second fund.
Yeah, I fully agree with that. I want to talk about the recent article you wrote about going to the Golden State Valkyries game and realizing that something had shifted. I'll come to that in a minute. But I think I want to talk about language, because you said something earlier about some understanding of women's health starts and ends with the bikini. And in that piece, you talked about language. And I found that very interesting, because you talked about the almost the shift from talking about women's health to the health of women, how that sort of changed the tone of a conversation to sort of women's health kind of having this connotation that it's all about, sort of reproductive health, whereas the health of women is almost more encompassing to the health, which is everything about the health from a
Yeah.
woman's perspective. Why do you think language matters so much?
Oh, language matters in everything we do. We can see it right now going through the thread of research and everywhere we are. You certainly see it in our relationships with other human beings. If somebody says the wrong thing, they, can really catalyze a bad experience.
Yes.
Language also can be used to educate and uplift and change. Nobody remembers great quotes because they were poorly worded. They remember them because they were impactful wording.
That's true.
Repositioning language, I'm just kind of a word nerd that way too. I think the importance of language is very real. This is why marketing works, and we have to be thinking about that in the field of treating women, caring for women, and the health of women. if we use language that has been backed into a corner, well, let's get rid of it and start new language and use something different to get our point across.
Yeah. I also have experienced this myself when I'm talking to people about sort of women's health. And I almost have to step back and do the education that it includes heart disease. It includes conditions with, sex or gender specificities, autoimmune and so on. It's not just reproductive. That's why I found that really fascinating and I wanted to talk to you about it. But going back to that game, you said something shifted. You noticed that sort of women's sport weren't being treated as cute side projects, but as actual sport, just given the number of people and the attendance. Can you talk to me about your impressions and what you took away from that?
Yeah. It was interesting. About 10 years ago, or maybe a little more even, I went to a New York Liberties game, basketball, female, a WNBA game. It was empty. I could have had an entire section to myself. It had the players I knew because I'd read about it were making, virtually no money, less than you'd make working in an ice cream parlor as a kid. There was no real impressive gear. There was no real impressive show. Women's soccer has ebbed and flowed in the US. Women's baseball isn't even a thing for the most part out of college. Even tennis is in ice skating, things like that. Well, a few sports where women are really appreciated. And even there, it's more around Olympics time, right? So I went to the Valkyries game. A, I just love basketball. B, I got invited by a friend. And C, my logo is Venture Valkyrie, so it was hard to argue. And I was blown away by the fact that the stadium was A, it was sold out.
Yes.
B, the stores for the gear were so full, and a lot of things were sold out in the stores. And as you looked around the stadium, it was easily half men, not just women attending. All the guys were wearing the gear, the lavender that it may be, just like the women screaming and yelling, just like at a Warriors game, it would be. It looked exactly the same. And I was really struck by how different that was than in prior, sort of experiences I had in sports that involve women. So similar to that shift from women's health to health for women, it felt like a shift from women's sports to sports. Oh, and they're women.
Yes.
It just feels like we're in a moment in time where a lot of that is changing in a positive way, despite some of the blocking we're seeing on the other fronts in the same category.
I think I take away, we see a parallel in the health of women conversations. I meet so many founders building brilliant things, solving real problems in this category, and they sometimes run out of runway. Not because they weren't good, but maybe one of the reasons is the ecosystem doesn't maybe evaluate them in one way or the other. And when I read your blog post, I think you said something similar in a different way. I think you said something like, with the male investors, you have to go way beyond to demonstrate that you're going, especially with VCs, you're going to have to demonstrate how you're going to make money and big money, given the returns that VCs need to deliver from what you're doing. I wanted to ask you, if you could get in the ear of a founder before they pitch, what's the one thing you wish every single one would remember?
How the venture capitalist is incentivized to win. This is just a sales pitch, like any other sales pitch. You're selling your stock instead of your product. And you have to show them a path as to why buying your product, the stock, is something that will make their life and outcome better. You need to sell to your audience. And that audience, which is typically male, because more than 80, something percent of partners in venture funds are male. They have to be healthcare oriented because that's who's interested in healthcare deals. So pitching to people who are not healthcare oriented is generally not going to work very well. You have to understand how they themselves win and what motivates them. I'm amazed how often people come and pitch to us and haven't even looked at our website to see what we care about, the stage, the focus, the this, the that. Maybe that's the thing I would say is this is a sales pitch, like selling to any customer. You're just selling a different thing. You're selling yourself and your stock, and treat it the same way.
Yeah. You've been in rooms where deals get done and when they don't. What's something that some founders completely underestimate about how those conversations actually go?
They don't know their numbers or the potential for their numbers, and they don't understand how that math works for the VC, what they're looking for. There's everybody says, oh, it needs to be $1 billion business, or, that's not true. It needs to be a business where the investor can make, assuming they're a returns-oriented investor and not something else, which there are different types. So that's the other thing, is understanding who you're talking to. But if they're in a returns-oriented investor, you have to understand how they do their math and how much money it's going to take for you to build the whole company. more or less, and how that's going to affect returns, both early and late stage investment returns. You really need to spend some time understanding your customer and what drives them to make their decisions. You also, are much better off if you get a warm introduction in these situations.
Yeah. If I compare today to, say, just in the aftermath of COVID, there was a lot of capital flowing around. It was much easier to raise capital and raise funds. And then the Fed started hiking rates. And we've seen with the change of the environment, it's much more difficult today to raise funds. One thing I want to talk about is coming back to something you said. Women is not your market. And it's something that also when we do segmentation, it's one of my bugbears when you come to me and say, my market is women.
Right.
I'm a woman, you're a woman, but my problems or my desires and interests might be totally different from yours. So while we're both women, we might not belong to the same sort of market, if you see what I mean.
Correct.
But then the minute you begin to drill down, then you almost sort of run into that, this is a niche market. First of all, what's your take on how capital or the lack of it, given, the funding environment today, is affecting outcomes right now? And what could, as a founder, and I want to get really razor sharp on those numbers, what should I be sort of thinking about?
Well, the market today is harder.
Yeah.
It's the normal market, not the frothy market.
Yeah.
I mean, I'm unfortunately old enough to have lived through 3 major market downturns.
Yes.
And before I began, I'm sure there were plenty others, but the venture capital field is not so old that it was pretty small and bespoke, and most companies never received venture capital. Not all companies should take venture capital. There are extremely valuable and good businesses that are small. And by small, I mean, maybe they get to $100 million or $1 million, and that's still a good business. Can make the founder a lot of money and the workers there a lot of money, but not venture backable because the potential exit value isn't there in the same way. Doesn't mean it's not a good opportunity. And I think people forget that. I think it is harder right now to get money, but there's a lot of money around. And so you've got to be a great salesperson, and again, you got to understand your audience and what makes them tick. Saying that subsets of women is a niche market is true when it's a niche market, but women are 51% of the people in America anyway, and close to that worldwide. It doesn't take a lot of people to get out of being a niche. And so I think the real question becomes, how big of a business realistically can this thing that you're working on be? And if the answer is in your wildest dreams, you can't get it to be more than $50 or $100 million in revenue, you have to decide if that's really venture backable or backable some other way, better built some other way. It might well be worth it, depending on the exit potential. But you also have to understand as a founder that the only way the venture people can make money is if they sell the company someday or take it public, which is rare.
Yeah.
That's also part of it, is that you may lose control. And if that matters to you more than seeing it grow bigger, which is fair to your business, you also have to be thinking about that. What's the end game and how does that play out? So it's complicated. And I think we also too often conflate women's health businesses with women entrepreneurs. They're not always. In fact, I'd say more often they are not led by women. That's probably more common. I think we have to be kind of clear-eyed about the business, and nobody's getting points for being female or trying something that doesn't serve a large enough market to warrant returns.
Oh, absolutely. I want to talk a little bit about C-Sweetener, because women leadership is something that's very close to my heart. So you co-founded C-Sweetener to get more women leaders the mentorship they needed to rise. But you've also said mentorship alone isn't the answer if there's no capital behind it. So I guess the question is, what kind of capital infrastructure do you think we need, generally speaking, for, women in leadership?
Well, women in leadership comes in lots of flavors, obviously. It's, in nonprofit and for-profit and large companies and small companies and government and all sorts of places. And C-Sweetener was founded really to support everybody and match people with people who'd kind of been there, done that. That was a very great experience for me. And I sold that company to the HLTH Foundation, and they still run that program very actively.
Why did you found it?
It's funny. I was an Aspen Institute Health Innovation Fellow. We had to do a project. It didn't have to be a company, but it had to be something interesting and different that was in the healthcare realm. I procrastinated a long time in putting my plan together. And as I was doing my final procrastination before I had to figure something out, I was processing the many, many emails I get a week from women
Yep.
who I do not know asking me for advice.
Hmm.
I think because I'm, somewhat visible from the writing and speaking I do, I get a lot of asks for mentorship or advice.
Yes.
And
Yes.
I, in my wildest dreams, could not answer them all because I have an actual job. You know, and I was getting 20, 30, 40 a week saying, can you just give me half an hour? It occurred to me that I wasn't even the right person to mentor some of these people. I don't know a lot about biotech, for instance, and their biotech entrepreneurs, or about funding government research. Not my thing. So I was thinking, wouldn't it be nice if there was like a match.com that matched people with the mentors they needed? And then I went, aha, that I can figure out how to do. And that's how it came about. And
Wow.
I enlisted the help of a friend, another gal named Lisa, to co-found it with me. And we went off, found great software company to work with as the matchmaking platform and started recruiting our friends. It was great. Really fun.
Wow. Wow. What a great experience.
Yeah, it was a great experience. It exceeded my expectations. The other question about capital is, it depends. I mean, everybody needs the kind of capital they need to make the market work, their market work. So there's debt, there's equity, there's friends and family, there's, old-fashioned bootstrapping with revenue, all of the things. And it really depends on the size and scope of the business you're creating. And I think that the less venture capital and the less professional capital you need, the better off you are. By and large, you own more of your company, you have more control. Sometimes the money and the advice and the participation of the venture people is huge advantage too. But it really just depends on the business. So I think what we
Yes.
need is thoughtful people in the field, angels, seed investors. What we really need more of is later stage investors, Series A, Series B, Series C, growth capital, because while there has been kind of a renaissance in this field and there's a whole bunch of new women's venture funds or venture funds focused on women's health and health for women out now, they're almost all seed stage, very small, and they can't
Yes.
provide the follow-on capital for growth that the larger companies need. And so I'm hoping to help fill that gap. We're finalizing raising our fund, Go Red for Women fund, with looking
Mm-hmm.
at doing Series A and B deals, not seed
Mm-hmm.
deals. And we'd welcome anybody who's interested. It's a philanthropically supported fund. So it's a form of regenerative philanthropy where the money goes back into the fund to keep doing more deals instead of to LPs. But, people who support it get the advantage of having done something really good with their money, making a difference. But I think we need to see growth in that middle and late stage capital sector for this field to prosper.
I agree with that. I was having this conversation a couple of days ago with a friend, and we were talking exactly about this topic. And I said, if you look at the funding landscape in women's health, a lot of the funding that we have is actually at the seed, sort of the early stage side of things. When you go towards sort of growth capital, that's where it falls off. So there's almost like companies, when they get to that point where they need to sort of grow and scale, the capital is not there. And so we need sort of, better handoffs. We need more capital to come in at the later stage and then create this handoffs from the smaller VCs who are usually quite specialized, so they can go in early and work with the companies, but they can't write the big checks. And
That's right. And then companies can't write can't get the bigger checks to grow. They run up against the wall, and it adds to the narrative that companies can't get big enough or successful enough. And it's not true. It's that they can't get funded enough to get there oftentimes. So we really need to open up that aperture of capital on the bigger side to help these companies prove that the market is as good as we all believe it to be.
Yeah. Now, Lisa, what is the one thing right now that is giving you hope?
Well, that article I just wrote on my blog, that whole the change in the conversation is giving me some hope. And also, since we started our Go Red for Women fund, that was in October, by the way, that we kind of opened the doors, maybe close to 500 plans come through. So
Wow.
there's a lot of innovation going on in this area. And we're not seeing it all, I'm sure. We're only seeing what we see. But it's a new fund, experienced people involved in it that are great. We are seeing some great stuff. And we're seeing stuff and since we don't focus on reproductive health,
Yes.
we're seeing really impactful things affecting heart disease, neurology, autoimmune disorders, things that really affect women's lives, health, and survival. People could get very frustrated and stop, but they haven't.
Yes. Lisa, thank you so much. I think one of the things that I keep circling back to is just how powerful it is when someone says something out loud, the thing that most people know and feel but don't say. So, so Thank you very much, first of all, for writing the blog about the tough love, because I think you said there's some truths that need to be said. I think another thing that I'm taking away, and I hope that the audience takes that away as well, is I think not every business needs VC money. You talked about the different avenues, family, friends, bootstrapping. You need to think, is venture capital the right funding for you, depending on, your goals for the company and so on. So that's, for me, that's sort of two things that I'm taking away. But I think, Lisa, you've built companies, you've managed funds. I'm really excited about the Go Red Fund, and what you've said right now, it fills me with so much joy. I'm very excited to, for the feedback that you've gotten since opening up in October. But I think what you've really done consistently is naming the blind spots. And I think by naming them, you make it possible for others to walk in with eyes wide open. So thank you so much for that, Lisa.
Thank you. Thanks. And thanks for the opportunity to be on the show.
No, you're very welcome. It was my pleasure. So to those listening, especially founders, go read Lisa's work, not for comfort, but for clarity. And if it stings a little bit, it probably means you're ready. So, Lisa, thank you for refusing to cuddle founders with false hope and really showing us what it looks like when capital meets conviction. Thank you.
Thank you so much. Have a great day. Thanks again for having me on.
Thank you. And until next time, keep looking for the blind spots. And when you find them, don't flinch. Thank you, everyone, for listening. And we'll put everything in the show notes. See you in our next episode. Thanks. That's it for this episode of Blindspot Capital. If you learned something, share it. And if you're building something, reach out. And if you're investing in the future, make sure you're not doing it blind.